In a shocking twist that has the financial world reeling, U.S. investors have finally decided to jump back into the stock market frenzy, reversing a 5-day plummet that saw over $1 trillion evaporate from equity valuations like morning mist. Just when it seemed Wall Street was bracing for a prolonged downturn, the resilient bulls have re-emerged, ready to capitalize on what many are considering a prime buying opportunity. The question that looms large: is this a mere blip on the radar or the dawn of a new bull market? On Friday, the Nasdaq 100 rebounded impressively by 1.7%, while the S&P 500 climbed 1.3%. This resurgence, although a welcome sight for weary investors, was tempered by lingering concerns about the tech sector's earnings growth, particularly among the Magnificent Seven stocks. Notably, Nvidia Corporation, a titan in the AI sector, continued to attract retail investors eager to cash in on the AI boom, with J.P. Morgan strategists emphasizing that as long as retail money flows into AI stocks, the rally may persist. The political landscape adds another layer of complexity to this financial drama. The recent election of Mike Johnson as House Speaker has sparked optimism among investors, suggesting that Republicans may unite behind a business-friendly, deregulatory agenda under the next president. However, this optimism is coupled with cautious skepticism as many market participants weigh the implications of Donald Trump's imminent return to the White House. Laura Cooper from Nuveen aptly encapsulated the sentiment, stating that the market's confidence hinges on clarity expected around January 20th. Amidst this backdrop, economic indicators are painting a mixed picture. The Institute for Supply Management reported that U.S. manufacturing expanded slightly, with new orders reaching highs not seen since early last year. However, the overall figure remained below the key 50 mark, indicating that the economy, while moving, is not yet in robust health. These signals have contributed to volatility, as seen in the S&P 500's recent performance, where gains were often followed by abrupt sell-offs. The specter of rising interest rates looms large, with Fed Chair Jerome Powell's hawkish stance suggesting that investors should brace for prolonged high rates. This cautious outlook is echoed by Vital Knowledge's Adam Crisafulli, who noted that while some data is incrementally positive, it reinforces fears of sustained hawkish policies and elevated yields. Such dynamics have caused a re-emergence of market volatility, with traders scrambling for clarity in a turbulent economic environment. On the international stage, the situation in China continues to cast a long shadow over global markets. Recent data reveals that Chinese stocks are grappling with their worst start to a year since 2016, with the yuan falling below the psychologically significant level of 7.3 per dollar. Kenneth Brew of Societe Generale articulated the growing concerns, remarking on the repeated false dawns in China's recovery, suggesting that investor sentiment remains fragile. In the commodities market, oil prices are on an upward trajectory, reaching $74 a barrel, while gold has seen its best weekly gain since November, indicators that investors are seeking safety amidst the prevailing uncertainty. As we look towards the coming weeks, the interplay of political developments, economic indicators, and global market dynamics will be crucial in determining the trajectory of U.S. stocks. Investors must remain vigilant. The recent uptick could well be a classic bear market rally, a brief respite in an overall downward trend, or the beginning of a renewed bullish phase spurred by technological advancements and favorable policies. What's clear is that the market is a complex tapestry of emotions, data, and geopolitical influences, making it imperative for investors to navigate these waters with both optimism and caution. As the old adage goes, what goes up must come down, but in today's fast-paced financial landscape, the timing of those movements is anyone's guess.